I'm Teresa Matic with Resource Investing News. Speaking with me today is Justin Smith, Investment Advisor at Western Canadian Properties Group. Justin, thank you for joining me today.
Oh, it's my pleasure. Thanks for inviting me.
So, headlines from news outlets recently have been stating that the recent $400 billion gas deal between Russia and China could mean game over for BC LNG projects. But you disagree. Why is that?
I just think it's important to get at the heart of what the deal Russia and China actually did is. If you look at the amount of gas that they're going to be putting through the pipeline, it's about 3.7 billion cubic feet per day. And if you look at the amount of gas that China is actually going to need moving forward, by 2025, they'll need the equivalent of 16 times this deal to really make things run in China. There was a great article that ARC Financial did, and that really puts out the numbers. And I believe that the demand is growing at a pace where you're going to need a number of these deals to satiate those demands.
Of course. So in that light, what do you think would have to happen for the price of LNG to go up?
Well, it's always a dance between supply and demand. And right now, demand in the world is really exploding, and it's exploding for a few reasons. Number one is energy demand. So the world is displacing coal with natural gas because it's a cleaner burning fuel. I was just in China in December, and I was there one day, and I looked at my iPhone, and it was a completely sunny day out. But when I actually looked up at the sky, it looked like just a blanket of fog, and it was smog. You could see a little sun creeping through it was really rough. And China right now creates about 65% of their energy through coal, and they're displacing a lot of that with natural gas. So the energy demands, plus they're now getting used in cars, in trains, in boats, and a number of other applications, and that's really seeing an increase in demand. Now on the supply side, you're also having some plants coming online, and like I said, it's always a bit of a dance between getting that demand and supply right. So I don't expect prices to go anywhere too fast. If they go up a lot, more projects and just supply will come online to balance that out. And if the supply goes up too much and the prices come down, well, what happens is these projects are no longer economical to move forward with. They cost billions of dollars. So if they're not economical to move forward with, well, you don't move forward with them. The prices drop. The supply drops, the prices will then increase because you have less supply, and you still have that demand, and then all of a sudden these projects become profitable again, and then we'll see more LNG plants again start to come online. So it's always a kind of a balance between the demand and supply.
Of course. So in terms of LNG projects in BC, are there any that investors should know about? And if so, why did they pique your interest?
Yeah, they should know about all of them. Yeah, there's a lot of them. We have about 14 proposed plants on the books in BC right now. And a few of those are a little bit bigger and a little bit farther along the process than others. A few of the big ones, number one is the Petronas and Progress Energy plant, which is going to be built in Prince Rupert. Right now, Petronas bought Progress Energy a little while back for over $5 billion. They've already spent that money. They're spending over $2 billion a year in Northeast BC right now, drilling to make sure that they have the gas that they're going to need to satisfy those contracts that they're signing, because they're very long-term contracts. They're 20, 30-year contracts they're ready to sell this gas to these countries for. So when you have that long-term commitment, you want to make sure that you have the gas ready to go. And that's what companies like Petronas are doing right now. They already have their export permits. They've already got the land in Northeast BC. They've got their location picked out on the coast. They're doing their engineering work and their plant design work right now. So they've already spent billions to get to where they're at. And that's not just Petronas. You have the next plant, which is the LNG Canada, which is led by Shell, Kogas, PetroChina, and Mitsubishi. They're also doing a lot of drilling in Northeast BC, have spent billions to get the plant to where it is now. So you have a lot of companies that are heavily investing in BC already, including the Chevron Apache deal. Chevron and Apache right now have about 800 employees on site in Kitimat and are going to spend about $800 million this year to get that site ready for their plant when they decide to move forward. So you have a number of these plants that are moving forward and spending billions of dollars to get themselves to where they're at. But one of my favorite parts, and a part that a lot of investors don't know, is that there's also 2 plants in Oregon called Jordan Cove LNG and the Oregon LNG plant, which are on Oregon's coast, which also plan to use Northeast BC's gas. So these plants are also going to have an impact on BC because, of course, those gas fields create a lot of jobs and a lot of economic upside for BC.
Good to know. Of course. So you in particular have chosen to focus on a housing boom that you say will result from all the economic development surrounding LNG projects in BC. So why have you chosen to focus on that opportunity?
Yeah. Western Canadian Properties Group, we're a developer. We build properties wherever it really makes sense to build properties. So we're based here in Vancouver, but we've chosen to build up in Northeast BC because of the boom that's going on, and I believe is going to last for quite some time. And one of the big reasons we like real estate is not that we're fully in love, would never invest in anything else. It's not like real estate's the only asset out there, but a couple things we really like about real estate. Number one is you get a lot of diversification out of real estate. So you don't really care whether it's the Petronas plant that goes through, whether it's the Chevron, the Shell, or the plants in Oregon. All of those plants have pipelines that go back to Northeast BC. And in Northeast BC, there are lots of people drilling and driving trucks and doing all of those things, welding, tons of jobs getting created. And all of those people are going to need a place to stay. So at the end of the day, as an investor, you're left with the decision, how do I profit from the LNG investments coming, the billions of dollars coming into BC? And you say, okay, well, do I think Petronas is going to do well? Do I think this driller is going to do well? Do I think this well servicing company is going to do well? And you might do well on those investments. I'm not saying don't invest in those or anything. You could do well on those. But what you can do is you can invest in real estate because all of those companies have employees, and they all need places to stay, guaranteed. So I think it's an excellent diversified play on the LNG boom to invest in real estate. And then the other thing that I really like about real estate is the leverage that you can get from it. So if you can get a 4 or 5 times leverage on your blue chip stock, people will get very excited about that. Well, that's exactly what real estate is. You're putting down a 20 or 25% down payment, and you're able to have an asset that's worth 4 or 5 times as much as the money that you're putting down. So you're really able to take advantage of that leverage with very low interest rates at the banks right now, 3% and under. And I'm personally investing in real estate up in the area and have a number of investors that are doing so, and we're very happy with how it's gone so far, and I believe we're at the start of some very good things for real estate.
Great. So lastly, what do you think is most important for investors to keep in mind when looking at LNG markets?
Yeah, it's a great question. I think it's very important that investors do their own due diligence. So you're going to hear a piece of news here, you're going to hear a piece of news there, you're going to watch this interview. It's important that you get to the actual heart of the numbers. I know it's easier it's easier just to rely on what someone else says, but I think it's very important to dig down, get your own information so you can make a decision for yourself, because nobody cares about you as much as you care about you. So that would be number one. And number two, my recommendation would be, I believe, or at least in my opinion, it's important to have that diversity, to not put all of your eggs into one basket. So if you think, if you want to make a bet on one particular company doing well, that's fantastic. You might do very well. I just wouldn't bet the farm on it. If you're going to be putting up serious dollars in your portfolio, I think it's important, like I said, to A, do your due diligence, and B, put your money into an asset, whether it's an ETF or real estate or what have you, that's going to do well no matter which plants go through. Because at the end of the day, you want to be able to go into the horse race, bet on all of the horses to win. One of them wins and you make money. At the end of the day, that's all we want, and that's what diversity is going to allow you to do in this LNG investment that's coming into the province.
Okay, great. Thank you so much.
Perfect. Thank you, Teresa.
Thank you. That was Justin Smith with Western Canadian Properties Group. I'm Teresa Matic with Resource Investing News.